My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey, you know what? I have been interviewing a ton of people recently in the multifamily space, in commercial, in strip malls, and industrial flex, all sorts of kind of commercial investors. I haven't been interviewing very many people in the single family home space recently, but today we got a special treat because we've got Jay Chekansky zooming in from North Carolina, and Jay is focusing on basically a very unique way of doing single-family homes, affordable housing with creative financing all the way through. So Jay, welcome to the show. Great to have you.
Thank you. Appreciate it.
So Jay, give us a little snapshot of what real estate investing looks like for you. What do you invest in? What's the primary market? Are you a buy and hold kind of guy? Are you a long-term rental guy, short-term rental guy? Or as I know, something completely different?
Yeah, sure. So I've been at this game for over a decade now, and I've tried all of the above. Started flipping houses, started buying rental properties, holding some options, seller financing, sales, and I bought self-storage. I flipped mobile home parks. So done a little bit of everything. And the seller finance sales side has turned out to be the smartest thing in real estate that I've done so far.
Wow. Okay. So, and you're talking about single family homes. Where typically are you buying these properties? What geographic areas do you focus on?
Yeah. Yep. So these are single family homes that I focus on. I'm based in Charlotte, North Carolina, but I'm able to execute this business model basically within a 3 to 4 hour radius around me. Okay. So anywhere from call it the Raleigh-Durham area down to Greenville, South Carolina, and then I also do some business in Eastern Tennessee, which has proven to be a good market for the strategy as well.
And paint us a picture of what kind of houses you're typically working with. What kind of properties?
These are single family homes as well as double wide manufactured homes permanently affixed to land. These are all entry level, starter level type homes. So price points range, like a resale price point ranges from $180 on the low side to $250 on the high side.
Yeah. Okay. So kind of first time home buyer type properties, right?
That's correct. Yep.
Okay. So I was reading over the information you sent me ahead of time, and it is really cool what you're doing finance-wise. So I kind of get it because I've done something along those lines many, many, many moons ago, but it can be kind of confusing for the layperson. So if you don't mind, walk me through it like I was a not too bright 8-year-old, if you don't mind, Jay. That'll be about right on track for me.
All right, not a problem. So the really short, elevator pitch, fancy way to say what I do is I wrap a seller finance second around a private lender first.
What that you tell that to somebody outside of real estate, they're going, what?
Yeah. So what that means is the mechanics of it are, I identify a distressed property or distressed situation to purchase a single family home at a discount. Usually those homes are in disrepair.
Basically the same kind of thing a wholesaler might be looking for or a flipper might be looking for. Is that fair to say?
That is fair to say. And what I found about this niche is I'm able to buy properties in between those two where a little more than fix and flip numbers on a property that also doesn't really work as a rental. So just to give you an example here with some actual numbers and some averages, we'll identify a single family home that, let's say our purchase and our rehab budget comes to about $120,000. Right? So we're buying for 80, 90, we're putting 30 to 40 into these homes, right? And that actually allows us to we're doing granite, we're doing, entry-level cabinets, we're doing LVP flooring, We're able to subway tile the tub surrounds in certain bathrooms and making a very nice product that still meets financial targets for first-time home buyers, affordable housing type metrics. On a home that we're usually into for 130, we're able to resell that with seller finance for sometimes $230,000 to $250,000.
Wow. Okay. Very good. So you're finding these properties that are, distressed one way or the other. You're fixing them up. Now walk me through the financial side of things. So when you buy this, do you go in, do you buy it all cash? Do you look for owner finance? What is that side of the thing?
So typically what we do is once a deal is under contract, I put together an email overview that goes out to my network of investors that provide me with the capital to purchase and rehab the property.
Cool.
Those funds are secured in first lien position. They get a mortgage. We make interest payments to them every month. And it puts their cash flow on autopilot while they go on with their business and their lives and their families and everything else.
Yep.
Because this is private capital, in our mortgage that is securing the property, the lender provides us with permission to resell that property with a mortgage wrap in which the due on sale clause does not apply. Right? We have permission to resell this property. So after the repairs are done, this home is now, like I said, worth $240,000. Our lender is secured in a 65, at most 70% loan to value position.
Mm-hmm.
We resell that property. So if we resell it for $250,000, we usually receive a minimum 10% down payment. So that's a $25,000 or $30,000 down payment that comes to us as the operator. The new homeowner, they are qualified to buy this property with a third-party loan mortgage originator that specializes in seller finance stock. They make their monthly payments to a loan servicer that keeps track of all escrows for taxes and insurance and a loan.
Yeah.
So the advantage to our investors is this isn't a subject to type of sale. The end buyer isn't assuming that private lender first mortgage or anything like that. We remain in the middle. That way, if anything does go sideways with the deal, if for some reason our buyer runs into trouble, our private lender never experiences any of that. Our obligation remains to our investors and our private lenders. We continue making those payments no matter what happens on the other side, which knock on wood, Dave, in 10 years of doing this, I've only had to foreclose on 2.
Yeah. Okay. So getting back to the whole process then, let's see if I got it. So you're buying the rundown property, all cash, with an investor acting as the bank for you. So they put up the total purchase price, they put up the renovation costs, you do all the work, you put everything together, and you do a mortgage with that investor where now the property is worth, they're into it for 120 grand, but the after repaired value is now 230 or whatever it is. So they've got a very good cushion in there. Should ever hit the fan, they are very, very well covered. So that's job number one. So you get that all put together, and you're paying them nice, consistent cash flow on this $120,000 investment. Then you turn around and you have the right to sell that property to an end buyer who you then finance. So you become the owner financier of that. You create another mortgage that wraps around that first mortgage, hence the wrap, for a much higher amount, because now you're selling it for $230,000 or $240,000. So are you charging, is it different interest rates depending on who's holding the mortgage, or what does that side of things typically look like, Jay?
Yeah. So on the, I'm going to use the words investor and private lender interchangeably. It's the same. It's the same thing.
Yeah.
But so we pay our investors anywhere from 8 to 12% per annum with monthly payments of either interest. Some loans are interest only for a term of 3 to 5 years. Some loans are fully amortized for 15 years. It all depends on the life situation and scenario that our private lender is in. Got some folks that are retired and just want to travel and put their money to work with an operator that has a proven track record.
Yeah, they just want to set and forget and not have to think about reinvesting every 2 or 3 years.
Yeah. That's correct. Yep, set it and forget it. Whereas other folks, they're a little more active in the business. They want a little more churn, a little more turnover, a little more velocity with their money. And that's perfectly fine too. We've got products that fit that scenario. On the resale side, our base interest rate is 10%. There are times where we have flexibility to move that. Sometimes people want to come in with a stronger down payment in exchange for a lower interest rate. It's all a negotiation on that side, but it's typically 10% interest rate on the seller finance side.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Okay. Now I can hear people saying, okay, sounds very interesting. Why doesn't the end buyer just go to the bank and buy you out and pay a lot less interest?
And they could, right? There's no prepayment penalty with our resale or anything like that. They have.
No, I mean, with them getting into the deal, why don't they try to?
Yeah. And I used to think that way and wonder why. And then you talk to enough people and you understand their positions. And there's a number of different things. There's, some people are rebuilding credit. Some people are in a cash-heavy business, and they're in the process of creating the tax returns necessary to become bankable.
Okay. Read between the lines there, but yeah, I hear what you said. Yeah.
Hey, and Dave, like this one might sound a little crazy until if you watch the news and you see what some of these banks do to people.
Yeah.
There's some of our buyers that come from places where they don't trust banks.
So work with the bank. Yeah.
So owner to owner, gives them that trust level and that belief level. And honestly, Dave, if you're in a position to, most of the time, our monthly payments are pretty darn close to area rents. And if you've got the opportunity to buy for $1,800 per month or rent for $1,800 a month, which one are you going to choose?
Yeah. Yeah. I used to be in the rent to own business myself, my friend. So I understand it pretty well. Interesting. Very, very cool. So a couple of things that piqued my curiosity. Number one, if you've got a private lender / investor who would like more churn on their money, so they don't want to be stuck in something for 15 years, how do you structure it so they can get out in 3, 4, or 5 years?
Yeah. So in a scenario like that, right, if we have a 3-year term on our original mortgage, that gives us plenty of time to season our seller finance sale and prepare that promissory note for either a partial sale, a whole note sale, or hypothecation. And basically what that means is when I resell one of these houses and I'm holding my promissory note, I have equity. Right. So if I'm holding a note for $200,000 and I owe my private lender $130,000, I've got $70,000 of equity right there. And that's actually my average number on these sales. It's about $70,000 of equity between the two.
Yeah.
Well, I can use that equity. I can sell off a stream of my payments to another investor that is educated in the note space, and use those proceeds to pay off my first mortgage to my private investor, private lender. I can sell my entire note to another, promissory note purchasing investor, use those proceeds to pay off my first mortgage, private investor, private lender. I keep, whatever cash is the difference between what I sell my note for versus what I owe. And then, like I said, the third one is a hypothecation, right? Where I am basically pledging the cash flow from my note as collateral to another sophisticated investor that's going to provide me with a loan. And a portion of those loan proceeds are used to pay off my investor's first mortgage.
Okay. Is there any opportunity to get a different investor in first position? Like swap them out, basically? I'm not sure. I'm just wondering.
That would be selling the note, right? Basically, when that note gets let's back up here. Yes. Okay. Now I've got your question here. Yes, there is, but that would require some cooperation and some coordination.
Yeah.
To where basically the new investor looking to move into first position, they would have to purchase that note from the existing first lien holder, private lender, right? And that's how that could be done.
Yeah. I was just wondering if that could be very, very cool. That is fascinating. So you've been doing this for about 10 years now, Jay. What's the typical exit scenario? Because, ideally your buyer stays in there for the full 15 years and you run the course and yada, yada. I'm sure that happens sometimes, but that's not the norm. I think the average is people are changing houses every 5-6 years or something like that. What have you found to be the typical exit scenario for you?
Yeah. So there's no one size fits all.
Yeah.
It's a little end buyer dependent as to whether they're going to refinance and pay you off. And if they do, we get paid off. Our private investor gets paid off at the same time.
Yeah.
Like they're going to get paid first no matter what.
Yeah.
So something that we've been doing is taking, in addition to the seller finance sales, we're also flipping some houses, and we're taking those proceeds, and we are like on some notes, on some of these seller finance seconds, we're taking our flip proceeds and paying off our private lender first, and then holding the seller finance sale notes in our portfolio. And that ends up working out to, on the low side, we're getting about almost an 18% return per year. On the high side, we've had some home runs where we're making 30, 40, 50%, on the capital that we invest to pay those off. So there's that. And we've also, there's been times where I'm selling notes and repaying my private lenders and, taking some of that cash for daily life.
Yeah. No, I guess my question was the end buyer of these houses probably doesn't last the entire 15 years before they decide to move somewhere else. So what does that typically look like? What's the average length of one of these deals these days?
So right now, I have 9 years of trade. My first seller finance sale was January 2017, and those folks continue to pay like clockwork. That was a 15-year AM. They're 9 years into it. I think they're just going to continue paying. I've had, in well over 100 of these, less than 10 pay off early.
Wow. So people are sticking around and
people are sticking around. Yep.
Nice. Excellent. Well, as we're wrapping up, Jay, if people would like to connect with you and find out more about this, what should they do? Where can they go?
Yeah. So on most of the socials, it's simply my name, Jay Chekansky, on LinkedIn, on Facebook. Instagram is j.chikansky. And then I'm also getting a YouTube channel dedicated to this. Off the ground, it is called RE Cashflow Simplified. And that is where I'm doing deeper dives than what we were able to do here into mortgage wraps, into case studies, and some other videos just teaching the strategy and the mechanics of this.
Very cool. Jay, thank you so much for walking us through it. And hats off to you. That's a wonderful approach.
All right. Thank you.
All right, everybody, take care, and we will see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.